Good morning, everyone. This is Srikant Rajan. Welcome to the Stock Market Podcast from MPIinvest.com, the only community where you get guided assistance to invest in stock market, bonds, mutual funds, fixed deposits, and all kinds of insurance. If you're not a part of this amazing community yet, visit our website MPIinvest.com to join the free investment community. Coming to stock market, the Nifty opened at 17,766. Yes, a slightly gap down from the previous day, but from there it rise slightly and then went on a complete volatile ride. Yes, it fell fell to a low of 17,663, and from there again rose up, touching a high of 17,838, and then closed finally at 17,718. So 17,700 support was actually taken seriously. This did work. But then the FIAs had booked some partial profit, I would say, yesterday, who have sold for 461 crores, while the DIAs bought for 538 crores. So what happened after the market close is something that is very important. So we could see the Federal Reserve monetary policy data to be when coming up night, and that was an important news that all of us have been waiting for. So what exactly happened? So one thing I would say from my view, things are looking the same and nothing big has happened. So first thing, they increased the interest rates by about 0.75%, which is 75 basis points, which was completely acceptable because the market had already factored in. In fact, after this news came, the market actually started rising up. But after that, things actually took a total U-turn. In fact, yesterday in the evening when the US market opened, they were actually trading in the green. After the announcement of this, monetary policy, it actually went up, and from there it went crashing down. In fact, it closed negative. A big crash came in and closed at negative of more than 1%. So that was something which was seen in the market. So what would have happened is something that we need to understand here. So if you look at the US market, in the US market, why did it go green first? So people would have kind of squared off their short positions just before the monetary policy. And that's exactly why as soon as the monetary policy came up, people just squared up, and it was as expected, 75 basis point. It did not go for 100 basis point high. So it was as expected. So probably the market thought that yes, the market can kind of reverse from here, and that's exactly why probably people have gone for a short covering, and we could see a short covering rally. It went up, and after that again, as the comments came in from Jerome Powell, the Federal Reserve Chairman, he said that of course the same thing what he told in the Jackson Hole Symposium, that is their target is to achieve 2% inflation rate, and right now the economy is doing really strong in spite of increasing of rates. So they are going to plan another 1.25% of rate hike within this year end. So that means 1.25 rate hike means probably that market is going to see another 0.75 basis point hike as well soon. So this is probably what gave jitters to the market. So that means we could see another 0.75, another 0.5% hike, another two hikes is what we could see, and this is what gave jitters to the market, and the market actually closed in the negative. But then yes, this is the future, but this is not something new. I would say kind of we were expecting all these things, so I don't see a reason why the market should actually react bad. But then naturally, when the US market has fallen, SGX Nifty and the global markets are already trading in the red. So SGX Nifty is already, in fact, SGX Nifty had come down to a very low of more than less than 17,570. But then from there it is kind of recovered, and as I see right now, it is at more than 17,600. So that is something really good. So in US, the interest rates are still very low compared to Indian market, and not only that, inflation also is very high compared to Indian market. So definitely it is really bad news for US, but for India it's still not that bad, I would say. So of course there might be some initial reaction, panic reaction, but then market should kind of settle. I don't see any big fall coming in. So definitely we don't see any big fall. So it was it is just about 100-point gap down, which is kind of very normal, I would say, for this kind of situation. So if you look at the global markets right now, especially the Asian markets, Hong Kong is down by 1.59%. That we don't have to bother. Actually, that's been like that for a long time now. Korea is down by 1%. If you see, Shanghai is kind of flat. Nikkei, Japan is kind of down by 0.89%. But I would say it is kind of okay because in spite of Japan also kind of falling down, it is now kind of recovering since morning. So similar trend is what we could see probably in India, but then today, remember, today is the expiry also. So it is the weekly expiry today, and because of which naturally the volatility will continue to be there in the market, but then I'm not expecting a big fall. So one thing that we can see, that market is opening right now above 17,600, which is good. So we have a good support at 17,500. Until 17,500 is broken, I don't see a reason to worry on the downside. Similarly, on the higher side, of course, there might be some movement towards the higher side, which can be expected. But then again, on the higher side, 17,800 will continue to be a major resistance after 17,700. So these are two important levels to be watched out. 17,700 is a minor resistance and 17,800 is a major resistance. So these are two levels that can be seen. Apart from that, I'm sure whatever positions we are holding should get you some good profits in spite of the market being so really volatile and bad. So with that, however, one good thing is that the Gold and Gold Club members, Gold Plus members are already sitting with some good profits in hand, and we are expecting to close this week also with another positive week. So that's something happening good in the trading part. Coming to investments, yes, we did book some partial profits in some stocks yesterday, and of course, we could see ACC falling. Not only ACC, you name the Adani stock, and almost every Adani stock fell yesterday. Probably after the news that Adani Group has actually pledged the entire stock shareholding in ACC and Ambuja Cement to fund their own purchase. So that's exactly what we had discussed in the morning meeting yesterday, and of course it's time to we also that exit ACC, because you know why I don't hold any Adani stocks for now. So that's exactly what happened, but we booked a very decent profit of more than 10% in ACC. That's something really good. So with all that, what is happening today? So yes, with the expiry on, one good news is HDFC Bank actually has entered into a long-term partnership with London Stock Exchange Group's Refinitiv for digital transformation. Yes, so they are going to help the company in new customer acquisition and also reducing cost. So this is something very important. And just to let you know, Refinitiv is one of the world's largest providers of financial market data and infrastructure. So that is something really good for HDFC. So if HDFC Bank goes up, again watch will be on Bank Nifty and see if they can power the Nifty. Apart from that, Ashoka Buildcon, which we have invested in, especially in the Silver Club, has received a letter of acceptance from Southwestern Railway for the project, which includes electrical and telecommunication. So they have received this project, and they've accepted the bid of cost of 258 crores. So it's a stock which we have recently added some time back. So that also should start kind of looking good, is what I feel. So with all that, I would say as of now, on the lower side, 17,500 is an important support, and on the higher side, 17,700 and 17,800 is an important resistance. So these are levels to be watched. Coming to the market, I would expect the Nifty to close within 17,400 to 17,900. So this is the kind of expectation that's what I'm having about the Nifty today. So based on that, we would trade, and looking forward to yet another profitable day and closing this week with another good profit level. So with that, before I sign off, do press the like button if you love the content that we share, and that motivates us. And also ensure to share this podcast with your friends and relatives to help them stay invested properly and with complete guidance from MPI Invest. Goodbye. Wishing you all a great day.